Sorry. Anyway, what do we want to do for this? Okay, stop behind me. What do we want to do for this video? I'm trying to think, right? 100% think we should do putting the pieces together, putting everything together, and also another emphasis on bias. Not overthinking price action, because too many of you guys overthink price action. And if you don't yet, eventually you will, because overthinking gets everyone within the trading space, and we have to know how to minimize that. How do we minimize that with the strategy, with the back-tested? Look at the things on my head. It's so weird that that's there. Back-tested strategy, right? So let's go into it. Bam. So, getting straight in. I'm joking. That's valid. See my beautiful face. So, let's get straight into it. This was a trade I should have taken yesterday, but I didn't. Would have been a nice play. CPI pushed price to the upside. Price retrace for the 1 hour fair value gap. And, continue pushing price to the upside. So, apart from that, didn't take this trade. Should I have taken it? Probably. But apart from that, let's get into putting the pieces together. So we already went through, what have we gone through? We've gone through liquidity sweeps, order blocks, fair value gaps, proper market structure, bias, tapped into bias with an emphasis on it, and I said fair value gaps already. So now we need to know how to put the pieces together. This is probably going to be one of the last episodes of the technical analysis part of the series before we actually dive into the psychological and the tiny little things. You know, the tiny things that you're struggling with that's holding you back from being profitable. Tiny reasons why you keep getting stopped out, or, just aren't the trader you want to be. Yeah, that's what we're going into. Because why? It also helped me, because I truly do think it'll be like a universal help for everyone. There's no way I missed 2 fair value gap retracement plays within the past 2 days. It's kind of L Lonnie, I'm not gonna lie. Bam and bam. This low-key an L. Low-key an L for that. I'm not even gonna lie. I missed both of those. Anywho, let's get into it. Let's put the pieces together. So we'll start off with a few examples with liquidity sweeps. I want to make sure you guys still understand them. But perfect example is what is this? What is this? Liquidity sweep. Thank you. Why? It's a great question, because this leg, let me find, where's my toolbar? Bam. Okay, that's not the tool I want. And I can't find the tool I want. Alright, so this one, dang! That was okay. So why? What are we doing? We're chopping. Then we came down, swept liquidity, rallied to the upside, right? This right here, this leg down, taking out both of these lows, was the sweep, correct? You guys should already know this. Push price to the upside. Then what did we form from that liquidity sweep? What does this leg down form? I need to find my fat thing tool again. Where is it? I've been using TradingView for over a year and I still don't know where all this stuff is. Where is it? That's what the? Oh my gosh. One moment, I'm gonna find it. What is this? XABZD pattern? Oh my gosh. Infinity. To infinity and beyond. Okay, no, in actual seriousness, where is this? Oh, I found it. Okay. One moment. I need water. Anyway, from there, what did this leg down form? Bam. Hopefully you said it right in order block. Good morning. Bam. This is the order block right here. Why? Because from here 1939, 80 to 1931 was where orders were able to get filled, pushing price to the downside, eventually rallying. Correct? Correct. Now we have order block. Bam. Order block. Remember what we talked about yesterday with fair value gaps. An area within price action that has no contradicting orders. Second greater term. No wick backing candle. Correct? Correct. What does that mean? AKA empty candle. AKA lots of momentum, right? So, I don't even know how I'm explaining it, but bam. What did we form right here? Fair value gap. What time frame is this? Hourly. So, within here, this is an example of us piecing everything together. That's why I said I could have entered on this, and I'll go into this one too. Because why? Swept liquidity, formed an order block. Of course, remember, you can take these trades off of retracements into the fair value gaps or order blocks if you don't know how to enter on the liquidity sweep. Oftentimes, I'll even recommend, if you want to be extra cautious, waiting for that last break of structure, but sometimes it may not get you as best as of an entry as entering on, these retracements for the order block or for value gaps would. And recently I've been emphasizing, even with my trading, to enter on these retracement tools for a better entry, right? If it also provides a more validating stop loss, because I also want to go into take profits and stop losses within this video. So I'm going to show you, I'm going to go in, actually, and then let's go into this one. This example of the trade I should have taken yesterday. Price broke structure to the upside. Obviously, on daily, we could check that too. So we knew we were clearly bullish, right? 4 hour formed a fair value gap. Who cares? Blah, blah, blah. This is simply just continuing this overall trend. Remember, when price starts to rally or drop or whatever the case is, and does not retrace for does not come to take out more liquidity, you can enter off of these retracement tools. That's what they're used for, retracement tools. So, just like right here, what did we have? We had a 1 hour fair value gap. Price came in, filled it, filled more orders. You can see chop, 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 chop. Broke structure to the upside right here. Continued higher. It's like if you would have entered, well, if I would have entered, stops below the fair value gap, somewhere in that area. Targeted, highs right there. Solid 1 to 2, 1 to 2.5. It's not bad at all. Don't make your money, get in, get out. This would have been hit during London session open. So if you ask me, not too snabby of a trade. So I'm gonna go in, I'm gonna plot a few more examples. I'm probably gonna plot 3 more examples, and then we're gonna get into take profits and stop losses too, because you guys need to know. It's very, very simple too. It's not gonna be anything long, but I want you guys to make sure you guys are placing your stop losses and take profits in valid locations. Okay, I'm gonna go plot a few. Recording's already 8 minutes long. Let's not make it another 30-minute video. So I'm gonna go plot a few and I'll be back. I need therapy. Anyway, no, while I was plotting my stuff, I had a friend that came behind me, started talking to me. Shane Powers. He's a good man. And he sits down, he starts talking to me. He's like, how's everything going? Oh, no, it's going good. It's going good. He's like, oh, okay, but he's like, why is it going good? I'm like, just life in general is going good. But he's like, but like, why? I 100% struggle with opening up to people. Like, 100%. But something about just talking to someone, not random, but that's not so close of a friend, that's something that allows me to open up. I don't know, I'm rambling now, but we were talking and, he was telling me, maybe you need to take a step back, was what I was telling him. He's like, maybe you need to take a step back from where you are right now, because it seems almost as if like you're in over your own head, right? You need to, of course, if you want to be great at something, you can't have that work-life balance. It should be work, but I'm in a scenario right now to where I can maneuver that work-life balance, you know. I don't know. I was just rambling. But he's a good man. I'm going to remember him. Thank you, Shane. If you ever watch this. Most likely never will. But anyway, let's get into it. I plotted a few examples. Fair value gaps, order blocks, liquidity sweeps, and breaker structure. Or if you want me to actually say it properly, liquidity sweeps, order block, fair value gap, breaker structure. I will plot the break of structure right here. Bam. So I have a few examples right here. Let's get into them. And this is how you can more so pair everything together. And this trade on Monday would have been a perfect example. Price came down. Where's my fat thing again? Bam, we found it. Actually fast this time. So price came down. Ooh, let me turn that off. Price came down, leg down, swept liquidity, dollar signs. That's what the dollar sign's for. Form the order block, push price to the upside, chop, chop, chop within the fair value gap. Now, of course, you can just enter off of any of either the order block, fair value gap, retracement tools, or even the liquidity sweep if you know what you're doing, right? Liquidity sweep, I would say just simply entering off of that is a lot more advanced. You need time in order to be able to properly spot them whilst they're forming, because remember, it's easy to go back and look at it like this, but when you go back, when you're actually forward testing and looking at the chart, looking at the liquidity sweep forming, it's a lot more difficult, right? So in that, you need market experience. You need to get stopped out a bunch of times. You need to hit TP a bunch of times. You need to blow a bunch of accounts. I'm joking, you don't need to blow accounts, but you need to sit there and learn. You need to go through the learning trials and process and errors in order to actually be able to properly have market intuition. So anyway, price then came into fair value gap, rejected, broke structure to the upside, and pushed price up. So now you can see an example of where we could have gotten entries. We could have gotten an entry on this original break order block, break a structure to the upside with a stop loss below the low of liquidity, because then if price comes back downward and takes us out, this liquidity sweep was not valid, right? And then your target could have been somewhere up here, or whatever the case is, right? Could have been somewhere, right? Where you're stopped below the liquidity sweep, below the low of liquidity, that's a tongue twister, below the low of liquidity. I can't say it properly. Anyway, that was one place you could have had an entry. Another place you could have had an entry was a retracement for the fair value gap, stops below the fair value gap, targeting highs, whatever highs you'd want to target, right? Of course, this was CPI, or it could have been on a micro time frame at the breaker structure right here. After these lows, got taken out from CPI. Because remember, these are still lows right here. Those got taken out from this sweep, then push price rallied higher, right, during CPI. So those are three examples of where you could have entered, and also examples of where you could have taken profit and where you would want your stops to be, because having your stop loss in a good place is so important. So important. I cannot stress it enough. Whether it's a macro or micro time frame, so important. Another example right here. Bam. How long have we been recording for? 5 minutes. Bam. Right here. Price came up, took out liquidity. I don't want to use that one. We'll use arrow. I don't like the arrow. The other one's funnier. Bam. Anyway, price came up, sub liquidity right here. Dang, it's a fat arrow. Formed the order block, right? Broke structure to the downside here. Even though I did write it over here, this was the retracement. Here is actually the original, where price swept liquidity, formed an order block. This was the retracement for the order block, but you could have entered off of the breaker structure right here to the downside. There was also a fair value gap retracement. If you caught that, brownie points for you, because there's a fair value gap retracement right here. There's so many examples within price action. It's actually absurd, right? But right now we're highlighting the retracement for the order block price filling more orders. So we have an hourly fair value gap right here. Price then came down, broke structure to the downside, pushing price lower. There are so many more examples of places you could have entered on this play. Could have entered for this fair value gap retracement right here, an hourly, with stops above the order block, right? Targeting lows. You could have waited for this fair value gap plus order block to be tapped back into with your SL. I mean, you wouldn't need it above the order block, but above a significant high, I would say above the liquidity sweep. Not pushing price to the downside, but targeting lows, or even at the break of structure. And I can of course show you which lows. And then if it's at the break of structure, then you could simply put it above the high. Why? This is why I like entering on break of structure so much, because, sorry, the Pogo, they're after me. The hedge funds, they're coming to get me. Too profitable. That was a joke. But anyway, another example right here. Let me tell you why I like entering on break of structure so much. Why? Because when you enter on break of structure, look at it in this example. It is the very last thing that happens, right? Meaning, there's no reason for price to retrace. Everything has happened. The liquidity sweep, order block retraced, fair value gap retraced. Everything has happened, right? And the break of structure is the very last thing. So, it allows you to have a better stop by just entering on break of structure right above the highs. Then you could target however low you want. Bam, 1 of 5 risk reward. That's OD, but gets the point across, right? And then I'll show you guys this last example right here. Massive swept liquidity here. Massive order block. Formed a fair value gap. There's people behind me talking about Ethereum and Bitcoin. I don't think they're crypto whales, though. Not like us. I'm joking, I'm not a crypto whale. I just get my payouts in crypto. Anyway, fair value gap retracement here, and then break of structure. You can continue to see the example. Why? Because when you enter on break of structure, price does not retrace for nothing. You can enter on break of structure with a 0.05 SL. You know how small that is? And be good. Right there, bam. Like what? Like you're good, right? So, and then you can just put it above the high, bam. Target lows, and it targeted all these draws of liquidity. 1 right there, bam. 1 right here, bam. Like whatever draws liquidity you want to target, you can target, right? So many, so many. And then in this sense, if you were to enter on the fair value gap, personally, I would recommend waiting for price to actually reject. Depending on the circumstance, there are some instances where you don't need to, but the reason why they say wait is because orders need to get filled, and there's times even like rights. Good example is right here, where price will actually break through the fair value gap, taking more people out that entered immediately right as it was tapped into because they had their stops right above it, and then actually reject, you know. You want to be as cautious as possible. Even tomorrow with Thursday's trade, we're looking to be as cautious as possible, taking the best setup possible. We understand bias now. We understand we're bullish. So, gold, but yeah, that was an example of putting it together. Of course, you can mix and match this how you please. You don't need to wait for break of structure. You may want to wait for fair value gap retracement. That's okay. You have to figure out what works for you. Figure out what works for you and execute on that. If entering off of the liquidity sweep, if you're good at that and if you can sit there and back test it, good. Enter off of that. If you need to sit there and be like me and wait for all the confluences in order to execute, to know that trade will go in your favor, wait. That's okay. If your strategy is more so swing trading, waiting a few days in order to take an A+ setup, holding it overnight, that's your strategy. Execute on what worked for you. Remember, your strategy should be tailored toward you and your lifestyle and how it is right now. Don't try to force the strategy. Don't try to be like, oh, I gotta swing trade. Swing trading's working, but let me go intraday trade. Me, and then start taking some losses, right? Well, not really lost. It's like a losing streak to me is completely different to what you guys see. So it's everyone's different, right? And what they consider a losing streak. But anyway, my main point is going back test. If any of you need help with this, comment or even join the Discord, and I will be glad to either make another YouTube video on it if it's something I did not fully cover, or just help you guys out on the Discord. I mean, I try to be as active as possible. I try my best, but I also live life too. But apart from that, I hope you guys did enjoy. Remember, keep your stop losses in a valid location. Continue to go kill the market. Execute during your highest probability setups. And we will go into next episode. I need to think. So I'm going to sit there, think, figure it out, and then we'll get into it. But I love you guys. Thank you for watching. Go out, kill the market. Be the best version of yourself possible. And go out and just do it. I'll see you in the next one. Love you guys, and peace.